It's your 5 fundamental areas. You got to be an expert in these 5 areas. By chart reading, I mean multiple time frame analysis of trends. Support and resistance. And by the way, these are the areas we're going to cover today. Parallel and inverse analysis, which is your entry management. But you're also doing parallel analysis and inverse analysis subconsciously when you're analyzing the charts, which is the top one. And then entry management and verification. Now we can use tools like the Forex Heatmap, which is a visual tool for managing your entries. So if you have to become an expert at these 5 areas. Now, stuff like, trading in a Roth IRA, I mean, that's kind of a side subject. Depends on how much importance you can put on that. It might be important to you, it might not be. But these are the 5 areas that you should focus your energy and attention on. If you're good at these 5 fundamental areas, you'll be pretty good. These 5 areas, these things work. I mean, multiple time frame analysis by itself, being knowledgeable of just support and resistance by itself. If you're monitoring a bunch of pairs, just support and resistance, that by itself works. So what I'm doing is I'm taking a group of things here that works to some extent, and I'm putting them all together. So be good at these, and you'll be good. Here's another important item. I've had people say, well, gee, there's a lot of material, and they kind of feel guilty about not pursuing it. If all you have is 2 hours a week to pursue learning this stuff, that's enough. Because, I mean, that's a lot of learning at the end of the year. Some of you are retired or full-time traders. You'll be through all this material in 6 weeks. And then you can actually repeat it and go through it a second time. Don't feel bad about the fact that you have a full-time job, kids, or taking care of an elderly family member or something like that. Don't feel bad about it if you have other business commitments. But start the journey and plug away. And each week you want to be a little bit better and know a little bit more, whether it's one of these subjects here or some other subject you're studying in the homework, because I want the Forex early warning clients to be the smartest clients, and I will help to facilitate that. This next session is we're going to show you where all the learning resources are. So if anyone wants to learn how to trade this method, which we used to call the big lights method, it really is, I still like calling it that from the days of the red and green light software, or multiple time frame analysis, which is the real, that's what it actually is. I'm going to go through all the resources here. So remember I said that we have a certain agenda we're going to cover today, and I showed you where other things are that we weren't going to cover. All the stuff that I'm not going to cover today, I'm going to show you where that is, so you can turn this into your own 2-day training. And remember, all this information is available on the web. It's all web-based, and it's not password protected. Now, anybody can get the stuff that I'm about to show them. So there's different types of resources we have. We have written resources, which documents you can print out and organize in a notebook, books and things of that nature. Audio resources, which are like recorded files online that you can listen to, download in MP3 files. We have video resources, which would be DVDs and online YouTube-style videos. Okay, and then, why is everybody looking at that? Okay. And then website resources, which are just web pages with information that we like to use at Forex Early Warning. And I'm going to get that organized for you right now. We also have screenshot resources, which are just still photos on Flickr websites loaded with information. And then I'll give you some educational materials for the Forex Heatmap. Then I'll show you where to find all the educational material for the red and green light software. Okay. And so let's go through the materials. It's all web-based. Now I'm working off of, like I said, I had it all organized on this computer, and it's perfect here, but I got to find it here on this one that's showing, so give me a break here on finding it. I have your written resources. If you go to the FEW Education tab, there's 7 Forex technical articles here. Okay, Forex technical articles. Trading with the trend, effective use of price alarms, parallel and inverse analysis, multiple time frame analysis, and the Forex Heatmap. These technical papers are only like a page to a page and a half each, so I'm not going to kill you with a, it's not War and Peace. All 5 of those are going to be covered today. So there's the technical papers to back that up. And then there's 2 articles on multiple time frame analysis. One day, a long time ago, I was working for the red and green light software company, and I stumbled onto this article. I was like, uh-oh. Trading currencies using multiple time frames. And I sat there looking at that red and green light software. Well, this has got a bunch of time frames. And I ran around with this article screaming at everybody, look, look. They didn't even know about it. And I showed it, but nobody would listen to me. They were all scalping, brainless, looking at red and green lights. Stupid. And no one would listen to me. So I called it the big lights method to kind of differentiate from scalping. Then the whole thing, we go from there. So these are 7 technical articles. 6 of them are free. Please just read these articles. If you want to know how we're doing things, there's some written articles for you. On my website, we're going to cover a few of these in detail, but there's something called the Forex Trading Tips. 28 practical tips for trading the Forex. Okay, we're going to pick a few by hand today, entry and exit. We're going to go through these. But as far as reading the entire list, I'll allow you to do that separately. This is written resources. If you want to be part of Forex Early Warning, even before you subscribe, you got to print these out and read them. And if anyone has any questions about the Forex Trading Tips later, maybe we can have a question and answer session. Towards the end of the day, you know, if we have time, I'll do an open forum question and answer session on any of this stuff. Then we have the, if you go to the home page here, there's a link on the bottom left that says Forex Trend Traders. This is a message board, and it's it's got 550 people, 570 people, and we do not. It's not a general Forex discussion. It's multiple time frame analysis, parallel and inverse analysis, support and resistance, trading with the trend. It's what we do. Everyone else, I don't care what they do anymore. I've seen so much bad stuff on the Forex that I finally gave up. Want to come and do it this way, come here. Want to talk about ATRs and expert advisors that don't work, go to, I don't know, someplace else. So if you go to the files section in here, you can see the files area right there. When I refer to an area, it'll be right there. There's tons of written information in there, okay? Now let's talk about the audio resources. Well, let's go back to the, now we're talking about, so we're done with the written resources, let's go to the audio resources. On the FEW Education tab again, we have an audio training library. Now you newbies, all 5 of you, get with the program. This is a free audio, click and play audio training library. The subjects, how to use the trading plan, spot Forex brokers, news calendars, background on the Forex market, parallel and inverse analysis. These audios, the majority of them are under 10 minutes. If you haven't listened to them, please do for the veterans. I'll be updating these, like the one right here on spot Forex brokers. I'm going to replace that with 2 sessions. And then we'll have the links. Below there will be all the links to check your net capital for British, and then how to get British firms, American firms, and Canadian firms, how to get insured account, blah, blah, blah. We'll support you to make sure that you can, if you want, it's all the investor protection to make sure that when you send your money to a broker that it doesn't wind up in South America someplace on the beach. Okay, so it's like safety of funds. And once again, we have, I showed you the areas in the agenda that I wasn't going to cover. Those brokerage resources are already on there. See, I normally have a session on brokerage. We're going to skip it because the online resources are so good that we're just going to skip that today. So your audio resources are this audio training library. Then if you go to the FEW Education tab, down at the bottom it says Forex Educational Links. There's this real nice lady named Jeanette Watson. You click on her website here, and she archives the Wednesday night training sessions and has been archiving these training sessions. Yeah, if you don't listen to some of these, you're going to look like this guy. Okay. But these sessions have been archived for 2 years. Now look at the titles, okay? Trading on Sunday Light, Money Management, Rules for Exit and Profit Taking, Accucharts, Fundamentals, Fundamental Basics, Educational Websites and Links. If you own the software, I have one session where all I do is explain the summation formula to you, which the company that gives out the software won't even do that. Trading from an IRA. So that's one of the subjects we're not going to cover, but you can go find this here. You go down the line, here's a 5-part option series, brokerage part 1 and 2. Go on, so anything that we don't cover today, and now recently what we've been doing in the recent archives is there is now a text file that goes along with each training so you can have a complete printout of the training session. That's the Wednesday night webinars. And then if you go back to the message board, the Superlights, scratch that, not Superlights. Edit that out. I don't like that guy. the Trend Traders message board, if you go to the links section, every time, what I do is for each 5 lessons that I do on my Wednesday night trainings, I create MP3 files now. And they're all in the link section. And there's 15 up there right now, and I'm putting 5 more. So eventually I'm going to have 40 lessons up there. You just click, and it's all right there. MP3 files. So far we got the audio resources, MP3 files, and written resources. Let's go to the video resources. If you go once again to the links area on this message board, there's a series of, they're kind of crude YouTube-style videos, but it's from a Tampa presentation that I did similar to here I did in Tampa, Florida. And then if you go to the database section, here, there's a list of people who will let you borrow their original Big Lights DVDs, and one of those people, is anyone on that list? Joel is on that list. So you can email him, he'll send you the Big Lights DVDs. The last thing is the website resources, okay? That's the sitemap. So you go down to the sitemap, on the bottom left corner of each page of the website, and just go to the area that says Training Websites. If you come here, this is web resources, okay? So, and then there's also the, back to the Yahoo message board again. Forex Trend Traders message board. If you go over here to the area that says links, it's all of those websites that I just showed you, most of them are in the links section also. So they're duplicated. I have stuff duplicated in 2 places so people can actually find this stuff. So the links area is just websites. And if you go check that, if you just click on one of these areas, if you just go to like just the link section and the file section, just start looking around, you'll be amazed just what's there. So you could become a member of that message board if you want, with or without being part of Forex Early Warning. Now the next thing I want to show you is a different style of resources. These are screenshots. So go back to the sitemap. And then you go back to the, the training websites. So back to this page again. Go down the bottom here. These are Flickr files right here. Let me go through them briefly. Let's look at one, for example. These are Accucharts screenshots of the Accucharts package that includes the Forex Heatmap. Okay, so you can come in here, and right here you can get an example of what that looks like. And then you can get a screenshot of what a good entry would look like on the USD Swissy. So it says buy USD Swissy. And there's a library of these. So if you have the Accucharts indicators already, this will help you in the Forex Heatmap. If you don't have these indicators already, just go have a look and you'll see that this is a valuable resource. And look, there's like a ton of these screenshots here. These are examples of how to enter trades. Now, I'm not going to show you every one of these. I'll probably show you this stuff throughout the day. But just for example, if you own red and green light software, if you just click on that one there, there's 60 slides here with everything you can imagine. Okay. We're going to be using these throughout the day, but if I don't get to an area, you're free to look at it on your own. So these are your screenshot resources, your still shots. We have video, still screenshots. We have audio information. We have written information. And then strictly for red and green light software education, I would go to Jeanette Watson's website, the top one here, blackcrest.com. And if you want strictly red and green light software education, it's on there. Plus, I showed you some that's on my website also. This is support and resistance. We're going to go through it twice. Okay. The Forex is a support and resistance market. The Forex obeys support and resistance even more than the stock market or other. Now, other markets like commodities and stocks, if you want to be a stock trader or commodities trader, you can see the support and resistance on the charts. It's a visual thing. Okay? I can go up to an experienced Forex trader and go, hey, where's the long-term support on this one? And they can go find it. It's a visual thing. Okay? Okay, what are we doing here? We're doing trends. We're trend traders and we do trend analysis. All trends start and end at support and resistance. So if you're a trend trader, you're naturally a support and resistance person. It just dovetails right in. So all trends, even small ones, start in even retracements off of large trends. All trends start and end at support and resistance. So if you want to be a trend trader, you're automatically a support and resistance guy or a support and resistance girl. Now, trend indicators work a certain way. Trend indicators, like the ones on the red and green light software or the free trend indicators on my website, these right here, which we'll talk about, because we're going to do a comparison of 3 sets of trend indicators, and the Accucharts indicators are trend indicators. These indicators all work a certain way. And I want you guys to think like the indicator you're using. You can actually, if you know how your indicators work, you can start thinking like the indicator because you know how it works. There's a lot of people that spend a lot of money on that software, but they never had someone sit down and explain to them how it worked, therefore they failed. How many people can walk up here and explain? See, a lot of people use indicators, they can't even explain them. Anyone want to come up here and explain to me in front of 100 people what a stochastic is? Exactly. But they're using them. Oh my God. Don't do that. If you're going to use some indicators, learn how they work. For example, if you're going to use the expensive software, learn the algorithm. I got a training session where I just sit there explaining. I take 20 minutes just to explain how the algorithm works. If you want to use the free trend indicators, which are exponential moving averages, which are price-related indicators, the exponential moving averages on my website are exponentially weighted to the data on the right. That's how exponential moving averages work. Guess how the software works? It's regression channels that are weighted to the data on the right. Why do you think I picked EMAs to mimic it? So we're going to discuss, we're going to compare and contrast the different set of indicators. I've had a lot of people look on my website at my indicators versus the software and they go, man, these look exactly the same. That's because both of the indicators that I use to mimic the expensive software, those indicators work the same way as the software. I'm going to show you some pictures. We'll go through all the pictures here in a minute. Right now I'm just explaining it. Now, there's only, we're going to break support and resistance into 2 areas. Short-term support and resistance, and I'm going to give you the time frames to look at, and then long-term support and resistance, okay? Now, some currency pairs are not trending, okay? Some currency pairs are trending and some are oscillating. Back to our resources here. Go back to our resources here. Okay. So you come and look at the, go to the training websites page, and I have an entire section in here. Just this entire section is just oscillations. It's actually quite boring. But I mean, you know, an oscillation is something like this, where it keeps bouncing off the same area of support and resistance. You can see that the currency pair is oscillating, okay? You can see that it cycles up and it hits resistance, but it keeps hitting the same number. This resistance up here, this number right up here is the same number, okay? And then it keeps coming down and hitting the same number. And these are not only fun to trade, but very profitable. And then you can actually come in here and now look at these indicators here, okay? This is the Euro-Swissy short-term chart on that particular package. And you know, I've got the same thing right here. You could actually put these things side by side, and these are my free trend indicators. Look familiar? Should look exactly like the last slide that we just looked at. So you have the same oscillation cycles that were in that previous, and look at that. And now you, but on this package, it's a little bit better because you actually have the sticks behind it, the open, high, low, close, and you can actually start to see the numbers. So this pair is oscillating. You verified it with 2 sets of trend indicators. Plus, and Plus, I mean, this is Euro-Swissy. You've analyzed all the Euro and Swissy pairs, so you know it's going to fail. And then you can plan your next trade. This is how I plan trades at Forex Early Morning. I don't analyze the Euro-Swissy. I analyze the Euro-Swissy, then all the Euro pairs, then all the Swissy pairs, then you can write a trading plan. We're going to get into the discussion of writing a trading plan today. So that's one example of support and resistance. Now, if a currency pair is trending, now that pair was oscillating. Okay, if a currency pair is trending, that's different. If a currency pair is trending, by the way, that was a 1 hour time frame, to make sure everyone can see. I always want to tell you what time frame, excuse me, 4 hour. So a 4 hour time frame compared very well to the short term time frame on the expensive software. It's roughly 720 minute light to short term. Y'all got all that? Okay. And these are free trend indicators that you can use in lieu of it or alongside the expensive software. Completely up to you. Now, if that's an oscillating pair. You have other pairs that are trending. Okay, a trending pair is just one of the larger time frames is pointed in one direction, and the parallel and inverse groups are going the same way. So if a currency pair is trending, all you have to do is set a price alarm below the short-term support or resistance that's been established in the last 18 to 24 hours. That's how the Forex works. That particular thing may not work for the commodities market, stock market, blah, blah, blah. This is a 24-hour market. If you want to know where the short-term support is, it's been established in the last 18 to 24 hours. You go to a shorter time frame besides the 4 hour that I just showed you, and you just start poking your nose around there to see what's going on. So remember, if a currency pair is trending, we're looking for the support and resistance on the shorter time frames, and we're looking for the support or resistance that's been established in the last 18 to 24 hours. This is the pound Swissy support. Now, this isn't a 4 hour chart anymore. Look at the time frame here, 5 minutes. If you want to identify the short term support or resistance that's been established in the last 18 to 24 hours, you will look at the 5 and 15 minute chart on these indicators. It's a shorter time frame, so it's shorter term support. Remember, multiple time frame analysis, you're analyzing the trends of the market across multiple time frame analysis. When you're doing support and resistance, you're doing the same thing. You're analyzing the near-term support or resistance, and then you can do comparisons to the long-term support and resistance to see how far that pair can move. So we've looked at the example where the currency pairs were ranging up and down and oscillating on a larger time frame, a 4 hour. This is your short-term support on the pound Swissy. This is a 5 minute chart. So this is an intraday move. This is the morning move down in the European and American session, and now it's establishing its support. Your price alarm, if this currency pair is trending, and in this case it was, your price alarm will go right this little gizmo here. Right there. There's where your price alarm is going to go. That's your short-term support. And then you set your alarm there. When the alarm goes off, this is the pound Swissy. It's going to go off in the European session or the American session. When the alarm goes off, I'm going to tell you what to do next to manage your entry. But that's going to be covered in a few minutes. So you set price alarms at these critical areas of support. So remember, this pair is trending. So therefore, we're going to set a price alarm at the short-term support. When that alarm is penetrated, I'm going to show you how to manage that entry if you decide, or to show you how to make an entry decision to see if it goes down further. As you can see, the pound Swissy was at 216.95, so yeah, it did go down a little bit, like about what, 2,000 pips or something. It did keep going in this case. So I want everyone to understand short-term support and resistance, and how you monitor short-term support and resistance is with like the 5 and 15 minute charts on the free trend indicators that are on my website. Now let's talk about long-term support and resistance. Okay, you can see the short-term support on this pair. When it breaks through that short-term support and it gives you a valid entry, where's it going to go? It's just going to go to the next support level. People always say, you know, when do I exit and all this stuff? Well, I always tell them, why don't you try looking at some charts? You know, because the support and resistance is clear right there. You just go to the next, you just start going to the bigger time frames and then find the support on those. I can show you an example of like the pound USD right now. You know that the trend is up, and then you know where it's going to go because you know where the next resistance point is. So, and we can discuss, we probably should discuss at least one specific example. So, let's say you set a price alarm off of the short-term support here. And it works the same way on resistance. You go to the smaller time frames, you see the resistance, and you set a price alarm just on the other side of it to intercept the next move. Okay, you need to know how many pips there are between that support level and the next support, because that is your money management ratio. If you're going to start this trade with a 40 pip stop and the next support's 40 pips away, you're at even money management. If the next support level is 150 pips down and you're starting with a 40 pip stop, you're at 4 to 1. If you're right half the time, you're a millionaire. Half. And with the Forex heat map and the other ways that we enter trades, our accuracy is going to go way up. If it's not already, it will. So see how much room there is in between the short-term versus the long-term numbers. I'm going to draw a picture for you. I knew I had to get up eventually. I'm going to have to take the microphone off for 1 second, but I'm going to leave this one on. Let's say that you, and I'm going to do this, I'll be on the video with my audio, but for you guys, I'm going to scream. Okay, let's say your short-term support on the pound Swissy is, what is that number there roughly? Just give me a round number. 2.500? Yeah. Okay, so you set, so the support on the pound Swissy is 2.500. 2.1500? 2.1500. I'll get out of the way. Just give me a second here. 2.1500. You set a price alarm just below there. And then you go start looking at the 4-hour chart and the daily chart, the longer time frames, and you can see that there's another huge support level about 40 pips down. You know, 2.1460. That makes sense? In other words, right below there, like 40 pips, there's another huge support level on like the 4-hour chart or daily chart, something like that. You don't need this one. Just don't even worry about it. What you need to do is you need to set your price alarm here, because this is a 40 pip waste of time. You don't want 40 pips. It screws up your money management. If you start this trade with a 40 pip stop and it goes 40 pips to the next level, congratulations, you've just completely screwed up support and resistance. Now, let's say that below this next support level on the 4-hour daily or the midterm chart, whatever you're looking at, software, I don't care what it is. Let's say below here there's 300 pips. I'd go ahead and set it here. You see what I'm saying? You're comparing short-term resistance to long-term resistance. Always go with the bigger time frame. The rest of it is just a giant screw around. It is. I mean, are you going into a trade consciously knowing you want to make 40 pips? No. You want to go into a trade consciously thinking that you want to, hey, Mike, this one might go 300. Go look at the pound USD right now. How much room does it have to go to the next resistance? I'll show you if you want. We'll do it at the end of this session. If I can get those indicators. Where's my man here? Where did he go? Oh, you got those MetaTrader indicators set up? During lunch? It's a real problem not having the computer I wanted to do this on, because all my indicators are on that one and that one, and that one's on the screen. But we'll do that during lunch. We'll come back We'll look at the pound USD. Make me do it for the camera, please. This is a real example of what happened Friday and what's going to happen next week. I'll show you right now on the support and resistance. We'll look at it right now, and then you guys can, or those of you that follow my plans, you pretty much, anybody that didn't see the pound go up Friday was, I mean, I don't know. I don't think I can help you. I don't think this course is going to help. So do you understand what I'm saying here? This is the short-term support that I've determined off a 5 or 15-minute chart for my intraday. If the next major support level on a large time frame is pretty close, then put your alarm down here. Because the next support level is, where did the pound Swissy eventually go from 2.1500? It went straight to hell, didn't it? Well, I mean, look where it is now. Look at the price on the pound Swissy now. Go get a quote and compare it to 2.1500. Let's say you get into that one, you're done. You're done for 3 months because it did keep going down. Look at that price where this chart was taken. So the pound Swissy is way down there now. I don't know, what's the current price quote on the pound Swissy? Anybody got one? 1.16? Jeez. I think that Switzerland was dropping bombs on them or something. 1.6. The Switzerland army went and attacked Britain, dropped some bombs on them. Now, does everyone understand this simple concept of comparing the short-term support or resistance going the other way to the long term to see how much room you have to go? Does everyone understand that? Is there anyone that doesn't understand it? Does anyone has a question? I know you.
I have a question. Why would you not look at the long term and just dispense with the short term? That's what
because you have to compare the two. His question was, why would you just not look at the long term and dispense with the short term? Because that's your next potential entry. You're going to set your price alarm there, and if it breaks through there, you need to look at the long-term support to see how far it could go. That way you can judge your initial money management ratio. Your initial money management ratio is your initial stop versus the potential pips on the trade. And if you're working at 4 and 5 to 1 and higher all the time, you're going to be in pretty good shape trading.
Let me see if I can capture what you just said. Look at the short-term potential entry. If you don't get a big enough window between...
I call it room to move.
Yeah, 150 pips, you can try to get 75, 80. That's good.
I think that, if you want to come up with a minimum number here, if you got 75 pips,
Take half.
yeah, let's say you have 75 pips between there and the next major support area, I would go ahead and take that trade. When it gets down here, you can close out half your lots, and then if it breaks through, you know, it'll bounce off that support level, and if it breaks through there, then you're good to go on the other half of the trade, and you can re-enter. But always, when you get down to that first 75 pip level, close out half your lots, and then keep watching, you know, I mean, you'll know within 24 hours if it's going to retrace back up or break through. You've heard me say it 1,000 times. Close out half your lots and see what happens.
But you
That way,
stop loss then, too.
I would, yeah, on that, well, if you've closed out half your lots, that's the equivalent of moving your stop. You could leave your stop at break even on the difference at 0 at break even, and then you've already taken off plus 75 on the other half. That's your money management. Close out half your lots, let the rest go. See where it goes. What if it breaks? What did it do this time? Did it break it? Yeah, only by about 1,500 pips. Okay, questions on support and resistance, comparing short-term and long-term. Yes, ma'am.
Mark, once a trade reaches the alarm point, do you recommend letting it drop or go up?
I recommend looking at the Forex heat map, and we're going to cover that today when we get to that area.
Right here, the first resistance point that you got right there, did you determine that again off of the short term and then look at the...
Now, this is like your 5 and your 15-minute chart, your intraday, and I just went to a longer time frame here, 4-hour daily midterm chart on your software. Really inspect the longer time frames. That's a 15-minute chart there. I just go to the longer time frames. If you don't have that much room, you got to let this one go. Your alarm has to go down here. But let's say this is 75 pips. To the first real support level. If you get into the trade, you're consciously saying to yourself, I better take some profit here and move my stop to break even. Because, I mean, we all know that it could hit this 75 pip thing and then take out the rest of your trade. So you close out some lots, set your stop to break even, But if you look at the longer term time frames and they're separated, which in this case, I would say it was, it could keep going. Because remember, if you close out half your lots at plus 75, generally speaking, and you let it go and it keeps going on the other half, you can always add more and the other half of the trade will triple your profit. There's your money management. So compare the short-term resistance to the long-term resistance and see how much room you have. I've commented on that almost every night. How many times have I said in my reports, this one has room to move above this price? What do you think I'm doing? This is what I'm doing. I'm comparing the short-term resistance to, and also sometimes I'll go, this one has got layers of support, layers of resistance. We're going to talk about that as part of this support and resistance training. Now, let's talk about one more situation. You're going to love this one. What if the short-term support and resistance matches the long-term support or resistance? Get ready to make some money. Give me that number again, 2.1500. This is your short-term support on the pound Swissy. You put a, so you're thinking about setting a price alarm right below that area. Then you go look at a 4-hour chart. You go look at the red and green light software and everything's separated. Then you go look at the 4-hour data. You start checking out support and resistance, and there is none. So the short-term support is the same support level on all the bigger time frames. I don't care what you're doing now. You better get a babysitter. You better get a babysitter for your spouse. You better do something. Because when that alarm goes off, if the heat map's good, I don't care how many lots you trade. And you've all seen them. You experienced guys have all seen these when there's just no support down there below like 8 levels. Anybody see the New Zealand dollar this week? That's what I'm talking about. That's what I'm talking about. The New Zealand dollar this week, that's exactly what it did. All the historical support was gone. As a matter of fact, I looked on 3 charting systems and I couldn't find the support. I kept going back. I mean, what do you go back to 1960 on that one? Were they even around then? Were they a real country then? They have currency? If you got to keep going back on the time frames to the largest ones to find the next support level, that should be a big clue of what that pair is trying to do. And then you look at the trend indicators and they're pointing down. Now, what did I talk about Wednesday, Thursday, and Friday in my reports about selling the New Zealand dollar? Just trying any way I could to inform you that I really thought that one was, it went. New Zealand yen, too. Historical support, long-term support, 5-year support, 7, 8-year support is gone on those pairs. Don't believe me? Go do this analysis I'm showing you. I don't even know where it's going. I could not find any support levels on it. I don't even know when the New Zealand dollar was started. When did they start that one? They started the euro about 8 years ago. That's all I know.
So you go all the way back to a monthly if you had to?
Absolutely. Okay. But I couldn't find the support on a monthly. All right. I couldn't find it on any charts.
What's the monthly back in 2001 on the New Zealand?
In 2001 in the New Zealand, I don't know. What?
0.4 was...
0.4? Well, it's a 0.5100. And now, if you missed it, another major number is going to be 0.5. And when it gets to 0.5, if all the, these big round numbers on support and resistance, like 0.5000 in the New Zealand dollar, if all the trend indicators are pointing down and it breaks 5,000, that's like what I call a psychological level. That's like 100 on the yen, or, remember when the pound USD went to 2? Well, that was back in the good old days. You can actually take a trip to Britain now and only have to pay through one nose. It's still expensive. But like if the New Zealand dollar, is 5,200, 5,100, if it gets to 5,000 and is consolidating above there and all the trend indicators are pointing straight down, if you don't set an alarm there, you simply are not understanding what I'm telling you right now. There's no support on it. There isn't. You find the short-term support and then you go looking for the long-term support and it's not there. And all the trend indicators pointing down to, where it's going anyway, which is probably to hell. So. But look what some of these pairs have done. So you want to analyze the short-term support and resistance and compare it to the long-term support. Remember that pair that was oscillating? It was in a range. It kept hitting those numbers. This is a pair that's trending. Okay, so anyway, I don't even know why I drew this anymore, but in the short term, every time frame you look on the support and 2.15, there's nothing below it, and you start going, oh my God, there's nothing there. And I will tell you in my reports that if you don't have time to check yourself, I will alert you and I'll say, we don't see any support here. That's kind of one of my subtle clues. This pair is going to hell. Okay.
Will you cover in money management how you would try to manage that?
Yeah, sure. I'll give you some options. Okay. So, if you set a price alarm off of the short-term support and resistance, you check the long-term support and resistance, see if the numbers match, don't match, how far you have to go. Now, if you own the red and green light software, on those charts you can only get an approximation of the support and resistance because those geniuses forgot to put the price behind the chart. That was real smart. And so what you can do is go to the support and resistance slideshow right here. And there's a slideshow here that shows you how to approach that. Go through slide 1, 2, 3, and 4. And it'll show, it's a side-by-side match of my free trend indicators and conventional price charts versus the software. So look at these 4 slides here. By the way, to expand any chart to full screen, you click on it, and then there's a little button on the upper left that says all sizes, and it pulls it out to full screen. Now you've got a comparison of the red and green light software to a conventional chart, and it tells you exactly what to do. It's a little slideshow full of instructions. So we can further beat them down into submission. This guy spent $10,000 on their software and he's laughing, so I guess at least he can get a joke out of it. Now let's talk about price spikes. Okay. I mean, you guys have seen spikes. I'm not even sure I have to draw a picture, but you have 2 kinds of support and resistance. Spikes don't matter that much. I know that they sometimes piss you off because they stop you out, but we're not. But the name of this training is support and resistance, not how I get pissed off when I get spiked out. We can talk about that separately. But you're going to have a spike, and just remember, a spike. You can have an area of support and resistance where it's clearly identified on a chart, like a currency pair comes down. And it looks like that picture of the pound Swissy where it's got a clear area of support on a chart. But but the problem is that here you have this area of support here. A currency pair will be doing this, and all of a sudden it just keeps going. A spike where it just spikes in one direction. Naturally, it'll knock out your profits or whatever. It's going to happen. But remember, the key areas to analyze are the areas of support and resistance. The spikes, when you're doing your support and analysis, this is not the support. This is the support. Spikes are insignificant to all of the red and green light indicators we use on all 3 sets of trend indicators. An exponential moving average in a regression channel is not sensitive to spikes. It is very sensitive to areas of support, and going the other way, I had resistance, which the pair would be going up and then establishing some resistance. You could have a spike up here too, where it spikes. So the trends don't develop off spikes. Trends develop off of the areas of support and resistance. All right. Now, I have a set of free trend indicators on my website, and these indicators can be used to mimic. This is a set of free trend indicators that anyone can set up on a MetaTrader platform, and it won't cost you anything. And price alarms are included. But I want everyone to look at the daily chart on my free trend indicators and compare it to the red and green light software. And I've had a lot of people say things like, hey, they look really similar. Well, why do they look similar? Why do they look so much the same? That's because exponential moving averages here are exponentially, the data is exponentially weighted to the pricing on the right. That's how exponential moving averages work. How does this work? It works the same way, except it's regression channels. The red and green lines are regression channels. Does that make sense? The reason they look the same is because an exponential moving average works the same way as the regression channels they use, which are also historically weighted to the data on the right.
Why do they differ?
Why do they differ?
The time frames.
Oh,
In other words,
why do they differ? Because
the
they're
4-hour conventional mimics the...
the 4-hour chart on these indicators mimics like a 720-minute or daily chart, something like that, roughly.
Why?
And then, why does it? Well, I don't know. It's just that this thing is not really, what they call a weekly chart is not really weekly. Yeah. Yeah, you have to use one time frame to mimic another, by the way. So you look, this is a daily chart. Each bar is 1 day, and this is what they call a midterm chart, where each bar is 1 week. So to mimic this time frame, so to mimic this software, I have to use a different time frame on my indicators, and you can go through this entire show. You know, I mean, you can go through the show and you can see comparisons of the various time frames. I'm going to do a whole separate section of the training that's called Comparison of 3 Sets of Trend Indicators. I'm going to compare all 3 of them. These are 2 that I'm going to compare. Now remember that support and resistance is repetitive. We got about 5 more minutes and then we'll, I can smell the food. Remember that support and resistance is repetitive. Remember I showed you the chart where the pairs were oscillating? Okay, let's go to the pairs that oscillate. All this is repetitive support and resistance. It's hitting the same number and it's coming back down, then it's coming back down and hitting the bottom, and it's hitting the same number and it's going back up. And you can verify that on my indicators. You just go to another set of indicators where you can see price a little bit better, and you're doing a comparison, and then you can actually see the numbers. You can see 1.6100 is pretty good. It's going to bounce off that number in reverse. And then you're going to see it's going to go up to 6,300 and it's going to stall. So when I say support and resistance is repetitive, that's on a 4-hour time frame on a pair that's oscillating. But if you go to, it becomes incredibly obvious how certain currency pairs have repetitive resistance. You can see on this particular pair here, the New Zealand dollar, this is an old screenshot, but the numbers repeat. Okay? So look at those numbers, how those numbers repeated. And this is a daily time frame, so this is months of data. That make sense? The numbers repeat. That number keeps repeating. And if a currency pair is bouncing around in a range for a long time, it'll just keep hitting those same numbers. You've got to be able to spot those by looking at the different time frames. In this particular case, it's somewhat visual. Okay. Look at, well, it hit that support number 3 times. Okay. Now, next thing I want to show you is a support and resistance cluster. In my reports, I refer to them as layers of resistance or a cluster. Now, you want to see a cluster? Here it is. Here's one cluster. Look at that cluster. Between there and there is a cluster. Now look what happens past here, past that resistance. It tends to have a smooth ride. Where do you think we're going to be setting the alarms in the reports? If I say this currency pair has a good trend, but it has layers of resistance and we don't know where to set the price alarm, that's a pretty deadpan statement. It just means exactly what I'm saying. This is a cluster of resistance. Now look up here. Look at this cluster. Look at that cluster right there. Where are you going to set your alarms? You're going to set your alarms right here, right below the cluster, or above that full cluster right there. Why? Why would you set your resistance alarm there? Because look, it has room to move above there. You don't want to get stuck in one of these currency pairs. They come down and they bounce around doing this, and they establish the cluster. So you got to put, now if the trend is that way, I'm just going to put my alarm below the cluster. And if the trend is up, I'm going to put my alarm above the cluster. Because I just don't trade the other way. So if you see the Forex early warning trading plans with price alarms, what originally appears to be an oddball price, go check the charts and you're going to find that, hey, yeah, he's spot on there. Now remember this example we looked at earlier. This is short-term support. This pair is in a downtrend and this is intraday support. Well, actually, if you want to know the truth, this pair has established a bit of a cluster too. So where do I always set the alarm? I set it on the other side of the cluster in the direction of the trend. If you find a cluster, now if you want to set an alarm up here because you think it might go back up, and you want to play a shorter term thing, that's fine. You're just not a trend trader. But if you want to wait for it to consolidate out and then eventually go down, which that is the direction of the trend, then you're only going to set one alarm, and it's going to be below the cluster. So if you hear me refer to the layers of support, cluster, stuff of that nature, our alarms will always be on the outside or the bottom of them. But we'll be on the outside. Why would we set an alarm in the middle? It's just going to struggle to get out of there. Once again, it's a waste of time. You don't want to jack around with it. It's just unimportant. Now let's say this currency pair is oscillating. Where are you going to set your price alarm to go back up? Roughly right about there. But look how much room you have. Hundreds of pips. Get out of the cluster. Don't put your alarms anywhere in there. Always put your alarms outside the clusters, on the top or bottom. And if you're like me, I only put it in the direction of the trend. If I spot a cluster and I know the support that the trend is that way, I'm only going to put my alarm below the cluster. Covered support and resistance. Now I want to go back and cover a few more points again on support and resistance, and then we'll go through whatever questions you have. So the Forex is a support and resistance market. Anytime a trend starts or ends, support and resistance is involved. If you're a trend analyst of the Forex, which I'm asking people to be, using multiple time frames, you know that when a currency pair, let's say a currency pair comes down, 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 and it keeps hitting on a number and it won't go through it, it's getting ready to go that way. Happens every time. So new trends always form off of that support or bouncing off of that resistance. If it keeps trying to get through a number on the upside resistance and it can't penetrate it, it hits it 3 times and it won't go, about a 90% chance what's going to happen? It's going to go the other way. But that's not just true for the Forex. I mean, it's true for commodities, the price of oil, the price of gold. I mean, good Lord, it's everything out there that's tradable. And a new trend will form off of that support or resistance. And just remember, you have short-term support and resistance. These little retracements, these little retracements are short-term support and resistance. But if you get into these larger time frames, is 4-hour, daily chart, midterm on Forex, these are bigger support and resistance areas, and it's your job to compare the short-term support and resistance with the long-term support and resistance. All right? Remember that the trend indicators we use are price related. If you're using regression channels on software or exponential moving averages, these are price based. Exponential moving average of what? Price. When you're using the expensive red and green light software, what is the algorithm based on? Open, high, low, close. Price. And that's why the indicators match up so well. Now remember, some currency pairs are oscillating in a range. They're just cycling up and down. They hit a number and they come down and hit it. And they just keep cycling up and down, hitting the same number. That's a great way to trade the market. If you got a big enough oscillation, you can make plenty of pips work in the market that way. If a currency pair is trending, all you do is look at the smaller time frames. This is a picture of a 1-hour chart, okay? This is kind of intermediate. But remember, if you want to identify the support or resistance that's occurred in the market in the last 18 to 24 hours, you're going to go over to a 5 and a 15-minute chart to see where that support and resistance is established, so you can set your price alarm. Sometimes I'll send out a price alarm on a pair, and it's like 100 pips from the market. Why am I doing that? Because it's in a cluster. Like if this currency pair was down near the bottom of this range, like here's your cluster right here. Okay, I'm not going to set an alarm in here. I'm going to probably set it roughly right around there and then maybe mention this spike. Look, you got a little bit there too. Your best price alarm is probably there. Now you can set one there, and it would depend on how many pips were between there and about there to see how far it could go. Remember, this is a 1-hour time frame. Remember that we were discussing maybe about 75 pips would probably be enough. If all the trend indicators are open and you've got at least 75 pips of room to the next resistance point, you probably can make an entry because you won't get, there won't be any problems. But you got to stay out of these clusters, okay? At least wait till it hits some number. So a lot of times I'm setting price alarms that are 100 pips away from the market, and people can't figure out what the heck I'm thinking. I get these emails, why is that price alarm so far away? It's never going to hit. I say, if it does, buddy, you're going to be in good shape. The reason I'm setting it there is because you're inside a cluster. You're inside layers of resistance, and you just don't want to mess around with that. Remember, if you break significant support or resistance, a significant trend could ensue, because all trends start and end at support and resistance. Support and resistance is visual. Anybody can do this support and resistance stuff. You know how you do it? You just look at a bunch of charts. The next thing we're going to talk about is parallel and inverse analysis, and this is, I've had a lot of great reaction to when I explain this stuff. Remember that 99% of Forex traders don't use parallel and inverse analysis, and every one of them is going to be screwed trying to trade. 99% don't use it. Now look at the people in this room. You're part of an elite crowd. Okay? If you know about parallel and inverse analysis, you're already ahead of 99% of Forex traders. It's unbelievable what you can do with your entries if you understand parallel and inverse analysis, even if it's just rearranging a bunch of lights on some expensive software. I'm sure you can do so much with parallel and inverse analysis. So the first thing I want to do is I want to discuss the major pair groupings, okay? This is an indicator called the Forex Heatmap. This is the forexheatmap.com. Now let's talk about the basic groupings on parallel and inverse analysis. And this is an indicator of sorts. I want to explain to you how this thing is arranged. Right up here you have all the USD pairs. Then you have all the Swissy pairs with the CHF on either side. Then you have all the Euro pairs with all the Euro pairs on the left. And then somebody had too much for lunch. And then it shows all the yen pairs, all the yen pair, JPYs on the right. The pound pairs, and then the Euro pound, the pound's on the right. I had a newbie ask me, why don't they put the GBP on the left on all of them? I don't know. Like the Aussie dollar, the Euro Aussie, it's on the right. Well, why did they do that? It's too cool. I don't know. Just look. Just do it. Just look at it. And then you got the Canadian pairs and the New Zealand pairs. Okay. Now, so these are your groupings. These are your basic pair groupings. And then next thing. So let's talk about some basic relationships on parallel and inverse. In other words, if you're a newbie and you're taking parallel and inverse 101, you always start off with some basic knowledge, and the basic knowledge is as follows. That this is the first thing they teach you in Forex newbie class, babypips.com and all that other stuff. Parallel and inverse analysis. If the Euro USD is rising, the Swissy is falling, right? So the best pair to trade is to sell the USD. Well, what happens if they're both going up? Well, you trade the Euro Swissy. It's pretty simple. You just look at it. It's by logic. See, the USD is on the right on the Euro, and the USD is on the left on the Swissy. So that means that the USD is controlled. The USD is weakening. And this is very basic. We got to start someplace. Now, but what happens if the Euro USD and the USD Swissy are rising? Here's what you do. You just take out the common denominator. It's like algebra. You scratch out the USD and then scratch out the USD on the bottom. And what do you wind up with? You wind up with the Euro Swissy. These are the cross pairs. Okay, so if the Euro USD is rising and the Swissy is rising, the best pair to trade is the Euro Swissy. Now, a lot of people don't even call him Euro guy. You got to pay attention here, dude. He sees that the Euro is moving higher and he wants to trade it. But if he only knew that the Swissy was rising too, he would not trade the Euro. He would trade the Euro Swissy. Because 1 + 1 equals 2 on the Forex. Euro plus Swissy equals Euro Swissy. That's why they created these pairs. So Europe could do business with Switzerland. Right. So that's a very, very basic thing. But this little exercise works on any pair. You just go to the next pair. You go and then you establish your thought process. For example, if the Euro USD is rising and the USD yen is rising, just take the USD and cross them out again. Just cross them out. What do you wind up with? The Euro yen. So if you got an indicator, or some indicators, which we're going to go through all of them, that can show you that the Euro and the yen are both strong, what's the best pair to trade? The Euro yen. The next thing we're going to talk about is a basic concept here called the driver and the passenger. Now, if you, some of you are just going to love this. I mean, I think they have that road race down in Baja every year. You know, they have a driver and then they got a passenger. And then after 12 hours, this guy has to go to the bathroom, so they switch drivers and just keep going. You got to picture it like you're in the front seat of a car and you're driving. You're the driver and you got a passenger, a noisy passenger that won't shut up. Okay, so you come over to any one of the trend indicators we use, and I'm not talking about a 10-minute chart, folks. I'm talking about like a currency pair comes down for like 4 days. Let's use the Euro yen for an example. So the Euro yen comes down for like 4 days. Let's say that's about a 4-day period. And it stalls at support. Then you just go happen to look at the Euro Swissy and Euro USD, and all of a sudden they magically look the same. They've been doing the same thing for 4 days. So what drove that pair down? Well, the euro was weak. So you look at the Euro Canadian, Euro Swissy, Euro anything with the EUR on the left, you look at it and you go, man, they're all coming down together. Duh. I mean, yeah. Okay. So now the bigger picture is starting to confuse you, but actually, in a way, it's starting to clarify what's happening. So the euro comes down, and it stalls. Euro yen comes down, and all of a sudden, you just happen to notice in the Asian session that evening that anything with the JPY on the right, USD yen, pound yen, Swissy yen, New Zealand yen, Aussie yen, if you're using software, all the lights on the left start turning green, or you just look at other indicators, heat map, things of that nature, and you notice that all the Asian session, all the yen pairs are green in the Asian session. What's happening? It's switching drivers. What drove it down in the first place was a weak euro. What's going to drive it back up is when the yen weakens. And so what you do is you line up all the yen pairs together, and they all start turning green at the same time. It's switching drivers. Because something had to drive that pair down. And then so when does it switch drivers? When it's consolidating. When it's going sideways and consolidating, it switches drivers. They all do it, and this happens every day and every week on every pair. It's called switching drivers. Now, these are those scenarios where a lot of you've seen where the you know, all the yen pairs, those of you heat map people, we'll get to that in a second. But all the yen pairs come down in the Asian session, or they come down for a few days, and all the JPY pairs, the heat maps turns green in the Asian session. Jump on that one, buddy, because they're all reversing in front of your eyes. And it's beautiful. So this is something that we're going to discuss also. So when the euro-yen came down, in that first example I showed you up here, one in the middle, where the euro-yen came down, the euro was the driver and the yen was the passenger. The euro was providing the push. Does that make sense? Okay. Good. I drew that picture myself. It better make sense. And all the euro pairs, you notice that they're all doing the same thing. Now, edit point. Oops. Now, in this case right here that I just showed you, the euro-yen, okay, the euro was the driver and the yen was the passenger. Okay, so the yen was probably going this way and the euro was dropping. The yen was doing this for a few days, and the euro was dropping, the euro USD, so it pushed the euro yen down. But what if the euro is dropping hard for 3 or 4 days and the yen is dropping hard for 3 or 4 days? The euro yen will absolutely collapse and drop hundreds and hundreds of pips and just get absolutely slammed to the turf. And all you have to do is recognize what's strong and what's weak in the market with this multiple time frame analysis, and you'll start to spot these things. Like, as soon as I need the guy, he leaves. Where's Glenn? Oh, yeah. Well, remember that night we were in Skype together? I was in Skype with you guys in the pound yen. The pound was getting ready to go this way, and the yen was getting ready to go that way, and we were all just, our hands were trembling. We knew it was going to go. And that sucker, kaboom, 350 pips in just no time on an overnight trade. So when you start to recognize that, hey, if the euro looks like it's going to drop and the yen looks like it's going to drop, the best pair to trade is the euro-yen, and that's when you can make a lot of pips. Now, that's parallel and inverse analysis of the market. You're sitting there looking at the charts and you go, well, I think the euro's going to drop. Oh, it looks like the yen's going to drop too. Better start setting a price alarm on the euro-yen. If not, for 19 bucks a month, I'll do it for you. You'll get your 19 bucks worth on that one, dude. It's
slingshot effect.
Slingshot. That's called the slingshot effect. Hey, somebody's done the homework because it says it right here in this lesson. So, and it works both directions. Let's say the euro USD is strong across the board and the yen is weak. It's going to slingshot. That's when you're going to get the fastest movements on the Forex. And if it's a pair like the euro Aussie or pound Swissy, it's going to go so fast it's going to scare you. These are the fastest and best movements on the market, and you can spot them with your analysis. Even a low volatility pair is 150 pips of movement when that happens. It's real money. So, the drivers and passengers switch place when? At the big consolidation points. The euro-yen comes down for 3 or 4 days and it stalls and it starts consolidating. It's switching drivers. There's only 2 sides to the pair. You better go figure out what those yen pairs are doing. I mean, that's going to tell you what's going to happen. So the euro-yen comes down for a few days and stalls. You start watching all the yen pairs and they all start moving higher together. You'll see it every day and every week in the Forex if you're watching for it. Okay, now let's look at this next example. This is a trend. Okay, on the bottom, you're looking at some software indicator or one of my free trend indicators, and this isn't a 15-minute chart, folks. This is like a daily chart, at least a 4-hour chart, midterm, stuff like that. Big trend. Let's say, I don't know, for the sake of the poor euro guy, I'm killing him over here. Let's say this is the euro USD. Intermediate term uptrend, 2 weeks or longer, possibly 3 or 4 weeks. On the first day, the euro strengthened. Then the next day, the euro pair strengthened. Then the next day after the consolidation, the USD weakened. Then the euro strengthened again. Then the USD weakened again. Then the euro strengthened again. Then the euro strengthened again. It keeps switching drivers. What is the definition of a trend? It's a series of switching drivers that's going in the same direction. A trend is just, if you understand parallel and inverse analysis, you'll understand trends. Okay? A trend is just a long series of continuous market dynamics on both sides of that pair, the driver and the passenger, that favors one direction. And I know that 65 people here today, and no one has ever had a trend explained to them that way. Never, not one person. Because I'm here to explain it to you. So that's what a trend is. So the market is dynamic, okay? You've got, let's say the market is in a tight range. By the market, I mean like all the major pairs and exotics are just doing this every day, and you can't seem to just make any pips, and it's just a problem. Let me explain to you what's going on. If you get into one of those little tight ranges, what's happening? It's just that you got this small moves every morning, choppy, and there's no trends on the market. You look at 20 currency pair, and you can't find any angle and separation up and down on anything. What's going on? This is called the market dynamics. One day the Aussie dollar is strong, the next morning the Canadian is weak, the next morning the USD is strong, the next morning the yen is weak. We've been in these markets before. So I get these emails from these newbies and assorted worldwide customers like, hey, you're not making any pips. Well, yeah, and I want to deeply apologize for not moving trillions through one pair to satisfy you. It's not my fault. You need to get it. Okay, some traders get it. The answer is in the chart. If you look at these charts and you see it do that, you just got to say, aha. Your entries and exits are going to be different in this kind of a market. But if you don't see this, oh, well, you're just going to blame the $19 a month guy. Okay. See, you get into one of these tight-ranging markets, and this is true in commodities, it's true in any market. When you get in one of those tight-ranging markets where there's just a struggle, all the pairs aren't doing anything, I'm pretty sure it's not my fault. But you got to understand, you got to be able to recognize it. You got to be able to say, well, the Canadian pairs moved a little bit yesterday, the yen pairs moved the day before that. The market is just trying to sort itself out to see who's finally going to win and create a trend. So that's when the heat map becomes extremely valuable, because in these short, choppy markets, you get these little 50 pip things, and that's really all you're going to get. You got to know when to pull the trigger and get out. Yes?
I find the value of the Forex early warning is a win-win, that either you find that point that you're monitoring and it will break through and you've got pips, or you don't trade and you don't lose any money.
Well,
So
okay, yeah. What he said was, I'm going to repeat this one. What he said that also it's like a giant support and resistance cluster. When the market's not doing anything, you're just in one of those giant clusters. You just got to recognize it when to stay out, unless you're willing to go for 30 pips or something, and that's what you want to do. As long as you recognize the situation and adjust your trading to where I'm going to close out after 30 pips. Like, I'll occasionally trade against a trend, and I always cut it off at 50 because that's just me. So, but if you can at least recognize the situation and, like you say, not trade or pull the trigger much quicker to get out, the thing that I want you to do is be able to recognize it. Okay. Now, that's parallel and inverse analysis from the standpoint of analyzing trend indicators. Now we're going to talk about parallel and inverse analysis from the standpoint, and we talked about the drivers and passengers and the slingshot effect. We've talked about all those things. Now we're going to talk about using parallel and inverse analysis for entry management. This is a totally different ballgame. This is using parallel and inverse analysis to manage all of your entries to give you a yes and no decision every day. Okay, after you analyze the market and you write your trading plans, you already have a pretty good idea of what's happening with parallel and inverse analysis just based on the trend indicators, okay? And we can look at a few of the parallel and inverse indicators. Now, a lot of you come from a background, so let's look at let's start moving into the parallel and inverse indicators for entry management. Now, a lot of you come from the red and green light software background. Now, in my mind, this is a pretty good setup for the pound pairs. That when you enter a trade, if you at least got this much going for you, let's say you want to sell the pound USD. Now look how it's set up. pound Swissy, pound yen, pound USD, and euro pound. So you would want the euro pound, the GBP is on the right, so you would want it to be the opposite color. If you're getting ready to sell the pound, or if you sold the pound, if it looks like this, that's not bad. It's at least a decent way to say, at least I got the pound on my side. I know who the driver is. So it's not bad. And there's some problems associated with the software, because remember, I'm going to do a session that's called 3 sets of trend indicators. I'm going to compare them all, so I'm going to compare this to the other ones. But this in itself is not bad. A little bit on the expensive side. But here's kind of a drawing or a image of the Forex heat map. This is basically the same thing converted to an indicator. So when you enter a trade, you can see that the pound is strengthening across the board. This is like just an example. See, if you had a plan to buy one of the pound pairs, and you came and looked at your indicator and it looked like this, you would say, oh yeah, pound is good to go. So at least you know what the pound is doing. But could you imagine if you knew what both sides of it were doing? Well, that's the Forex heat map. We'll get to that in a second. So as you notice, we're back. Remember the original pair groupings that we talked about? We talked about pair groupings, all the USD pairs being together. Start looking at some more examples here. All right. This is the yen. This is the yen pairs. Now remember, you can organize. I'm going to go with this one. Remember, on the software, you can organize all the yen pairs together, too. Well, the lights are red. But look at this particular indicator. So let's say the yen pairs. Remember I showed you the picture of the euro-yen coming down and stalling? Let's say the euro-yen goes up for 4 days and stalls. And then you look, my God, the pound-yen, Swissy yen, Aussie yen, they all did the same thing. Wow, the yen must be the driver. Duh. That's the analysis. That's the market analysis part. And they're all stalled at the top of the cycle. Here comes the Asian session. And it's not trending. There's no clear trend. There's a pretty good chance it's probably going to come back down. Here comes the Asian session, and you look and you see this. I mean, dude, you got to enter a trade. You got to put in a paper trade or something. I mean, if you're not going to trade this, you're never going to trade anyway. This is pretty serious stuff here. I mean, you analyze the market, and all the yen pairs go up for a few days, and then they all stall. What's happening here? It's switching drivers. It's switching drivers. Does anyone remember? It's switching drivers. This is just a great tool for entry management. So would you like to sell if the euro yen is at the top of the cycle and all the yen pairs are dropping, is that a pretty good time to sell it? Yes, for those of you that didn't know the answer to that one. And this is something, so now we can use parallel and inverse analysis for an entry management tool. Okay? We know that we've already checked the trend. We know what's happening there. Now we're going to use it to manage our entries. The Forex heat map is an entry management tool. That's all it does. It doesn't analyze the trend for you. It doesn't analyze support and resistance for you. And it will put you into a trade going against the trend. And to put you in a trade against the trend, I mean, you just have to look at the trend indicators. I mean, they're free on my website. You've got to look at them. But unexpected things happen on the Forex, and so it's a very nimble system. Now, the Forex heat map, it says right on top here, it monitors 20 currency pairs in real time and verifies your entries. Okay? And you can look at the listing of pairs. Okay, it's on the left. So you can see exactly, now 20 pairs, no, I don't know anybody that's in 20 pairs right now. I don't know anybody that's in 20 trades right now. Gee, Mark, when are you going to add pair number 21? Because I'm just dying to get another one. We know we know you're not in 20 trades. Most people are in 1 or 2 trades at all times or out of the market. But if you look at it, there's certain pairs like, let's say the euro is strengthening. You look at the euro pairs, they're all green and the euro strengthening. Let's say the New Zealand dollar is weakening. What's the best pair to trade? Buy the Euro New Zealand. But the Euro New Zealand isn't anywhere on there. The Euro New Zealand is nowhere on here. If you look at where is it? And then you go down to New Zealand pairs, it's not there either. It monitors 20 pairs, but it tells you how to trade about 35 pairs. So it monitors 20 pairs, verifies your entries, tells you when not to enter, and sometimes it finds another trade like your Euro-Aussie trade you were discussing. It'll point you towards another pair, then you better go look at the trend indicators. It tells you when not to trade. It identifies the risk of entry. Should I stop now? Is that enough? And you can use the Forex heat map about 6-7 minutes after non-farm payrolls for entries. If you go to the Forex heat map website, in the second paragraph on the right, it says, here's a screenshot of the Forex heat map with the associated trend indicators. This is the Accucharts setup. It's incorporated into this platform. That's a screenshot of it, and then that's a live screenshot of the actual platform itself. A lot of you people have access to these indicators. I've sent them to you. This is the, let me just look at this example for a minute. You can see that the pound Swissy was consolidating. It was consolidating. On this particular trading plan, it was in an uptrend, so we set a price alarm right up there. Said, how often does the slingshot occur? You're looking at it. So we set a price alarm there. Then this is the European session, and the volatility kicked in on the British pound news. The alarm hit right there, and it went up 230 pips. Why did it do that? Well, let's look to see why. Whatever pair is highlighted in these indicators, this is the heat map with the associated trend indicators. So this is the pound Swissy. It's highlighted, so that's the chart that's on the right. See that the pound is strong on all four. So now your job is to go figure out which the best one is. If you look at the other combinations, look, the Swissy's weak. If the pound is strong and the Swissy is weak, you buy the pound Swissy. We're not talking about 30 pip moves here. This isn't scalping. This is the real deal. Euro guy. He's asleep. Finally got mad at me. But this isn't a 30 pip move, guys. Look, it's 225 pips. If you're 100 pips late, good to go. Well, I mean, this is, come on. Now, how many people have access to the heat map right now, the Accucharts version? Raise your hands. What is that? Less than half the room. My goodness, what are the rest of you doing? So we're going to solve that problem now. We're going to solve the problem of not everyone having it. Forex heat map is going to be live on the internet in less than 2 weeks for all Forex early morning subscribers. That's when you're supposed to clap. Here's what it looks like. And I know that the current heat map version on Accucharts, it updates once a day. This one updates twice a day. Let me explain why. You're going to laugh and you're going to say, oh, Mark would never say that, but the reason it updates twice a day is based on logic. About to shoot a lot of holes in what a lot of people think about the Forex again, but the current Forex heat map updates at 2200 GMT. So I live in Central Time Zone, so this is based on Central Time, but everyone can follow this example with me and just add or subtract an hour to wherever you are. But generally speaking, here's how the Forex operates. This is a map of the world. The world is not round. Starting at 0 GMT, this is like places like Sydney, Auckland, 0 GMT people, Aborigines. Okay? Then you get Tokyo, Hong Kong, right? Singapore, those markets open, New Delhi. Then you have a consolidation or a retracement after. This is called the Asian session. So, I'm trying to confuse everybody. All these places are in Asia, except for Australia. It's its own continent. Then it comes down and it consolidates. This happens every night in Central Time. I mean, my time, that's about, what's this, 5:30 Central, 7:30 Central, 8, 9. And then it consolidates. Then there's another city here called Berlin, Frankfurt, Paris, London. What's the next one? Then it goes across the ocean, little gap, places called New York, Chicago, these other big markets. Y'all ever heard of them? So the Forex heat map currently updates right here at 500 GMT. The next version of the heat map, 2200 GMT. This version of the heat map updates twice. So it goes back to 0, it zeroes up. Now you would never think that I would do something like this based on logic, would you, knowing me? People just don't understand, what time frame does this work on? This one works on this one, which is the way it's supposed to work. This is how the market works. This is just the biggest duh. I mean, why would you want a 1-hour time frame on this? That'd be really stupid. So you got to work the Forex heat map according to the market. The Forex heat map, the current version, updates once a day. The version on the web will update twice a day. Let's go through the explanation here. You want it to do what the Forex does. Why would you want it to do something else? So let's look at it. It'll be on a web page, so you'll be able to click on your refresh button. It'll have the GMT time on top, plus you see that percentage number? So it's at 1945, it's 93% of the way till the next update time, which is 2200 GMT. And then at 2200 GMT, it zeros. And then it'll give you another percentage reading. So if it's halfway between, so if it's between, let's say that's 17 hours there. Let's say from 2200 it zeroes up. Then you have 7 hours till the next update. And then so if 3.5 hours has gone by, that'll say 50% in the Asian session. Here's what you do. Here's how you're going to work the new heat map. It's going to be live on the web. It's going to be just, you don't need to drive your car until you're ready to go somewhere, so here's how we're going to do it. It's just going to be a web page. You're just going to go to a website, the alarm goes off, and you just click on the refresh button and it'll bring it up to the current GMT, and it'll be frozen. Then you're going to go set up your trade platform. You're going to look at it, figure out which pair is the best to trade, check your trends, set up your trade platform. This is how traders do it. I do it. I know how traders do it. It takes you a minute and a half, right? Set up the number of lots, right? Boom, boom, boom. Then you're going to go click on the refresh button again, and it'll give you a picture, and you just double check everything. Set up your chart. You can either trade off the charts or off some platforms you trade off the charts. Some platforms you just enter the lots and pull the trigger. After you've sold it, you just go back and click on the refresh button again, make sure the configurations are good, and you're done. Okay, multiple time frame analysis is as follows. You take a set of trend indicators, and we use red and green lines. And I don't care if it's software, the free trend indicators on my website, or the Accucharts indicators, which are all somewhat similar. You take a set of trend indicators, and you start with the largest time frame, and you start drilling down the time frames. You start with the largest time frames on the right. In this case, the Accucharts indicators. You start with the largest time frame, and you start drilling down across the time frames in successively smaller time frames. The higher time frames will always overrule the smaller time frames eventually if there's a strong trend in place. So you drill down the charts from the largest time frames to the smallest in descending order. Every time frame has its own structure. Okay, the higher time frames always overrule the smaller time frames. So if there's a strong trend in place, the smaller time frames will eventually come along. If it's oscillating, the small time frames become more important because that's when it starts to bounce off. If a currency pair is oscillating, it comes down and stalls at the support and it wants to oscillate, it's going to start with the smaller time frames on the left. That's how the movement's going to start. So multiple time frame analysis. The prices in the lower time frame respect the prices in the higher time frames. So the support and resistance areas of the higher time frames you validate with the action of the lower time frames. If the support and resistance in the lower time frames matches the support or resistance in the lower time frames and it breaks through all of them, that pair will crash. It's like, remember I said you always want to compare the short-term support and resistance with the long-term, but if the numbers match, it breaks through there. This heat maps gives it the go. You don't have enough money in your account to trade that one. You will if you over leverage. 400 to 1 would be very popular again. So, the drill down process, drilling down the time frames. You're just drilling down the different charts, whether if it's on software, which I use it, or these other indicators, which mimic it. But if you drill down process and a new trend is starting, you will see that the smaller time frames on the left feed the larger time frames. And if a currency pair is already in an uptrend, you're just waiting for the smaller time frames to come into agreement with the larger time frames. And then, barring, we actually add the extra dimension of setting a price alarm, because the true definition of multiple time frame analysis is when the smaller time frames agree with the larger time frames, you enter the trade. That's the definition of multiple time frame analysis. But if you start setting price alarms and verifying entries with a heat map, you've taken several systems that work very well and you've incorporated them into one. If you drill down the lights, if you drill down the charts, no matter what you're using, you'll be able to see if a currency pair is trending, ranging, deep into a trend, just starting a new trend. That's what the drill down process will completely take that currency pair and strip it down to nothing. You'll be able to completely see that pair for what it has. If it's oscillating, you will see it. If it's trending, you will see it. If there's other parallel and inverse pairs moving in the same direction with it, the drivers and passengers, you will see it. So the red and green light software facilitates multiple time frame analysis. That's what it's for. You have a set of time frames, right? Okay. You have all these time frames, and these time frames are adjustable. I mean, you can put like more than 20, like all these time frames are adjustable in sets, you can put more than 20 time frames in. And so it's just for multiple time frame analysis. Now, you can also group the pairs somewhat by parallel and inverse analysis. It's very cumbersome. And then like you could put all the pound pairs together and all the yen pairs together. And it uses regression channels. These are not moving averages. They're not exponential moving averages. They're regression channels. These are summation formulas, these lines. So let's compare those indicators with just some free trend indicators that I put together on my website. Now remember, here's some screenshots here. Remember, we compared these time frames. You can compare these time frames with each other, okay? You can compare the expensive software on the right with the free trend indicators on the left. Not bad. They don't look, it works fine. But on the free trend indicators, so Forex Early Warning will provide you with a set of free trend indicators on my website for anyone who wants to use them to be set up on MetaTrader. You can use them to conduct multiple time frame analysis across 9 time frames. 8 of the time frames compared to the software. Here's an example of the comparison. Why did they look the same? I already covered that. I said the reason they look the same is because the mathematics behind the regression channels is roughly the same. They know the data is exponentially weighted to the right. It's price-related trend indicators, right? Very close. So it'll never be the same, but it can be very close. It's a free substitute for the red and green light software. It's not copyrighted and trademarked. And price alarms are in the package. So if you go to MetaTrader, you can come down to MetaTrader here. And you go down to the bottom and you can set up the price alarms. So price alarms are included in the package. Now, in my trading plans, I send out sometimes 5 price alarms in one night. Get desktop price alarms. All the newbies, you don't have them. Is anybody in this room just does not have price alarms on their desktop, where you just come in and set up the alarms, you click on alerts and set up alarms? I'm giving them to you with a set of free trend indicators. You got to set them up if you're going to be part of Forex Early Warning. It's part of the package. This is a free substitute for Forex Made Easy. There's less time frames than the software, but I don't know, the price is good. You got price alarms included. The software doesn't even have price alarms. Who's working that deal? And also these have the price bars, the bar chart indicators behind the indicators. Okay? So price alarms are excellent for using with the Forex Early Warning plans because I'm always going to be setting those price alarms at areas where we want to check the market. These indicators are available at no cost for anyone that wants them. And so as an analytical tool, these free indicators are probably about a B. Entry management tool, B minus. Cost is an A plus because they're free. So what I'm trying to do is I'm trying to compare analytical tool, entry management tool, and cost on all three sets of indicators so you know what's an A with the various limitations of each one. All three sets of indicators have limitations. All three of them have definite advantages. Here's the next set of indicators. This is Accucharts. Forex Early Warning provides Accucharts and 2 workspace setups for multiple time frame analysis. Okay? Accucharts has more flexibility. It has video tutorials built in. And if you fund an account with $2,000, I'll give you private webinars that go with this to train you myself. The good news here is that if you open up a live account, you get rebates. So you can get Forex Early Warning for nothing. It's really a great program, and we're going to talk about Forex Early Warning in a minute. So multiple time frame analysis, 3 sets of indicators. I use all 3 of them. Here's what I tell people to do. Use any set of tools you wish. Use all 3. Use 2 of them. Use the 2 free ones. I don't care what you do. It's completely up to you. Okay? Each trader has to decide what they want to do. I'm just here to just explain them to you, but you have to decide for yourself. I mean, we're all big kids, but I'm here. I want to make sure you understand them, and you understand the differences, and I want to make sure you understand all of that. But what I don't want you to do is make a poor decision. I want you to make the decision. I want you to make an informed decision. The final decision is up to you. Yes?
Okay, so we're not talking about the heat map. Just kind of focusing on the right panel here in the Accucharts and comparing them with the free indicators that go with the metadata. Are they the same?
Yes,
or-
these indicators you see here are almost exactly the same as the free trend indicators, except on this package you have more time frames. See, on this package you have about 10 time frames plus these flexible time frames, like this is a flexible time frame that I can come in here and I can change the time frames on this flexible time frame, and then there's a flexible time frame on the other setup which is called FEW Basic 1. So this is about 10 to 12 time frames. MetaTrader is 8 time frames that match the software and a total of 9 time frames, and the actual red and green light software itself is, if I get you a picture of that, it's 7 time frames, but you can add 7 more, so you can layer it up to 20 time frames. Yeah, but it's all multiple time frame analysis, and the indicators are very similar. With these, you have the special entry management tool, and then over on the free trend indicators, which are on my website, these are the free trend indicators. We looked at those pictures. And here's a MetaTrader platform right here. So here's I set up a MetaTrader platform. Ricardo set me one up during the break. Okay, now here, look at this. I'm going to come over here, and it's just a price chart. This is the default settings. I don't even know what this is. I'm going to come in right here, and I'm going to say, okay, this is a 12, and this is an exponential. Apply to the close, red. Let's see. I'm going to go down to here. Moving average. Attached to chart, I'm going to put in a 5. I'm following the instructions on my website for setting up free indicators. Let's see how fast I can do it. You want to go lime or lawn green? Done. These are the free trend indicators that mimic the software. I set it up on one pair. It took me 30 seconds. There's a macro in here where you can slam it across all the pairs. Done. 5 minutes. Free. Free. You can pay me if you want. Now, then these are the ones, Ricardo, these are the ones we're going to really promote. Why not, right? Price alarms, get the whole package. Now remember I told y'all we were talking about the pound pairs took off Friday. What did my report say Friday? Well, the pound broke out of its resistance. And I said, look how far does it have to go? Well, how far does it have to go? 1.4537, where's the next resistance zone? It's going to keep going. The pound's going to keep going. See that price right there? There's going to be a price alarm there Sunday to buy this pair. And it's going to keep going, and it's probably going to go up to at least this zone. It'll at least go up to 46.65. So, what's the pound been? Well, the pound was, we thought it was going to come back down, and then Friday it verified everything. Euro pound kept going down, pound went up. So, yeah, you can see, remember we were talking about longer term resistance. The pound, all the indicators, the pound's going to keep going. Monday and Tuesday, probably, but for sure Monday or Monday through Tuesday, and then it'll finally, you're going to look to get out of that cycle, because this is a new cycle over here. See this breakout cycle here, you can see that first level resistance right there. You can see the first level resistance at 43.65, and it broke out Friday. The verification from the Forex heat map was perfect in the American session. He bought the pound. Anybody mess around with the pound on Friday? He did. No one else did? Oh, you bought the pound Friday? Supposed to buy the euro. Well, towards the end of the week, New Zealand dollar was good, so all we're doing is looking at trends. And then I can go, like I could set up the New Zealand dollar, we can look at the support on that one, there isn't any. And so that's how quick you set up these indicators. Pretty quick setup. So multiple time frame analysis indicators, here they are. You can set them up very quickly, get them right off my website. Price alarms are just down here. And you just go in here and you can set up alarms for 20 currency pairs or more. Now, like I said, use any set of tools you wish or all three. I use all three. Kind of personal choice, but definitely make the best decision you can. I mean, for some of you trading a lot of lots, I don't know, $99 isn't that much. It doesn't matter that much to some of you. I'm not selling their stuff, believe me. I don't even care. But yeah, I look at it. I like it. So go to the slides here. So kind of do a little summary comparison here on the training websites. So you got the software. Facilitates multiple time frame analysis, uses regression channels, $99 a month, great analytical tool. On the analytical side, A+, entry management, lousy. You can set up 20 time frames. The free trend indicators on my website, set up on MetaTrader. I just set them up in 2 seconds. Uses EMAs, not regression channels. It's a good analytical tool. They're both good. 9 time frames, compares well to the software. And the Accucharts, I give you 2 setups. Got great tutorials, 10 to 12 time frames. Includes the Forex Heatmap market monitor. That's your comparison, kind of a summary. Step number 1, I read the instructions. Right? I mean, so I don't screw up. Step number 2, I review the 4 major trends on 20 currency pairs every day. About 2-3 times a day. Now, why do I do that? Because first of all, I want to see what's going on. What is multiple time frame analysis? The larger time frames overrule the smaller time frames. So what do? I go, and just these 4 on the right here, just these 4, I look them over real carefully. So, you know, I click and I click and I click, and, you know, I'm like a chicken, right? I'm click, 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 click. And you know something? To do 20 pairs, just to get an idea of what's going on, to write a trading plan, and to write down some notes of what you think is going. This pair is going this way, this one's going that way. All the parallel and inverse, it's all working in your mind. It takes 15 minutes. Really 20. And then what I do is I go back, and what do I do next? I check support and resistance. Next thing I want to talk about is about 15 minutes going through Forex early warning. And then, what we do is we send out trading plans 10 times a week on 20 currency pairs. Every Wednesday night we have 2 webinars. You want to download the webinar room, you can download it right there. And the webinars have been archived for 2 years in MP3, text, and audio. We have a huge library. We also train people on the expensive red and green light software. We have the community message board. We have you can become part of this community, and there's 570 people here, and we all use the same indicators. Okay? And I announce my Wednesday webinars on here every Wednesday, the agenda. So if it's something you're real sharp, you don't even have to show up. Just show up for the ones you want to or the ones you need some extra help with. Okay? Okay. Entry management. Now, you write your trading plan, or I write it for you. You set your price alarm. When the alarm goes off, go look at the heat map, do what it says. Okay, that's entry management, we're done. No, that's not it. We're going to go a little further than that. So the alarm goes off, or the news is over, you look, you're ready to, the alarm goes off, the resistance has been broken. All you have to do is first of all, decide if you're going to trade. And if you make the decision, and let's say, okay, the trend's good, the Forex heat map's good, I think this is the trade I want to take. Obviously you go through certain steps. You are going to, you're going to pull up your platform, you're actually going to enter the trade. Now, with the advent of the Forex heat map, I expect much higher accuracy and more pips than just if you were just pulling up a chart and just trading. This is strictly related to entries. So assuming the heat map is good, and you enter the trade, what you can do is you're going to start that trade with some type of a stop order, some type of a negative stop, and we're going to discuss your initial stops. So if you get into a trade, and let's say you sell a particular pair, well, buy or sell, we'll go through both examples. We'll go through it. And if that currency pair drops about, let's say you sell a pair and it drops about 35 pips past the alarm, and you're looking at the heat map, still looks good, go ahead and move your stop to break even. Okay? Because this is just the entry management part. We're not talking about taking lots off the table just yet. We're talking about entry management. We're not at the profit taking point yet. We've got to get our stop to break even. Okay, that's the first key, right? Okay. What you can also do is you can set a price alarm that's at like plus 35 pips, something like that. And when that alarm goes off, you go look at it, and it hit plus 35, then you can walk back over to the computer and set your stop to break even. Because when that alarm goes off, you are at plus 35. That's the profit bell. That's the good bell. Now, the other thing that you can do, there's something that's called a partial limit order. Let's say you start, I'll draw pictures of all this in a second. So let's say you start a trade with 4 mini lots. The alarm goes off, you look at the heat map, things are good, looks like a good entry. Let's say you start this trade with 4 mini lots. Okay, there's a couple of things you can do with partial limit orders. Let's say you sell a currency pair at price X and it drops 35 pips. Or you actually can go into your platform and you can put in a sell order. A lot of platforms will allow it, some won't. You set a limit order to close out 2 mini lots at like plus 35, 40 pips. So you've closed out half your lots. And the other 2, that's kind of your gravy train. You're going to let it ride. Heat map looks good. It's good entry. So you can move your stop down to break even on those other 2 lots and just let them go. That's your gravy. You're hoping that the damn thing drops 150, you know, and you're willing to risk it because you've already taken some profit. So look what it says on the bottom of tip number 8. The general philosophy is to get your stops to break even and let the trend do the work. You're using the heat map correctly, doing these things of this nature, buying the pound Aussie, making 600 pips, you know, it's a good entry. Okay. And remember, you're doing this by, you know, paper trading and then micro lots and ramping up to the bigger lots. So, but by setting a partial limit order, you've guaranteed yourself a profit on half your lots. Okay? So, remember, you're starting that trade with 4 mini lots, for example. You're closing out 2 at plus 35. The other thing you can do is if you set a partial limit order to close out half your lots, you start with 4 mini lots, you're setting a limit order at plus 35 to close out 2 mini lots, close out half of your lots. You can set a price alarm on top of the limit order. So when that alarm goes off, you're out of 2 lots. And then you go back to the computer and set your stop to break even on the difference. That's the gravy train. This is money management. You close out half your lots and let the rest of the trade ride. Now, let's go through a couple scenarios here. So I'm going to kind of give you some visuals on this stuff. Let's look to see, so on a buy, well, I don't know. Let's use a sell. You're selling the New Zealand dollar, our friend from down under, that keeps going further down under. So let's say, you know, I mean, typically a currency pair will, let's say a currency pair is in a downtrend like the New Zealand dollar, and then it starts to consolidate. So the New Zealand dollar will be our example here. And so the New Zealand dollar comes down, and all of a sudden it starts to build a support area here. What type of support area is this? Short-term support. Remember we discussed short-term and long-term support? This is short-term support established on an intraday basis on the 5 and 15-minute chart. We've already had the discussion of support and resistance. I showed you the examples. And you know the midterm trend is pointing down and separated. And you also know the pair is broken historical support. Okay, so it establishes some support in a consolidation in a so it's got one of these little layers of resistance, layers of support here, one of these zones, one of these clusters, and then it breaks through it. And there's no support on this pair, on any price chart. So it's heading down. You look at the heat map, good to go. So when it starts dropping, what do? Well, you do what I just said to do a couple minutes ago. You can set a price alarm on it. You can take your entry price, whatever that entry price is. Here's your initial stop. Your initial stop is going to be up here somewhere, right above wherever it was trading in the last 3 to 4 hours before it dropped through. And if it's bouncing around a little more, your initial stop's going to be a little higher. I have guidelines for doing that in the trading tips. But let's say it drops through the AP, the alarm price, and now it's going. You ended the trade. So you can set another price alarm. So it comes down. It's consolidating. And then here's your alarm price, and it drops through it. You can set another price alarm at plus 35. And when that alarm goes off, you walk up to your computer, close it. You can either set your stop to break even or close half your lots out and set your stop to break even. Now, the other thing you can do is to just go ahead and set a limit order here. Let's say you're starting this trade with 4 minis. Okay, you set a limit order to close out 2 of your 4 minis at plus 35, and it'll automatically close it out. And you can also set a price alarm on top of your limit order, partial limit order, to close out half your lots. So when that alarm goes off, you're out of 2 lots at a profit. When that alarm goes off, you go move your stop to break even on the other 2 minis. See that little X button? Just turn it off and just forget about it. Rules for exit and profit taking. Okay. Number 1, I want you to take profits because I'm telling you to close out half your lots. Now, if you're managing the back end of your trade right, you're not going to need to wake up tomorrow morning and trade again. Right? You're saving yourself another entry by managing the back end of the trade you're in. And there's a lot of ways to manage trades. And there's some crazy stuff that I could show you. I've had, these are just ideas and you can accept it for what it's worth, but I'm going to tell you that just consider this. This is for people that really want to stay in instead of jumping out every morning. And just consider these ideas. But in a situation where, let's say, you start a trade that's 5 mini lots. This is just a lot basis. You sell five minis. Okay, so it drops. Let's say, and it's a good entry, Heatmap, everything's good. You sell a pair, and it drops some number. You get mine's 35, 40, whatever yours is 50. Let's say you get to 50 pips. You close out 1 there or something. 2, 2's okay. And then it stalls, I don't know. So this is like 50. This is like plus 50. Now it's going to go, it'll drop a little more, right? And then it starts to retrace at the end of the American session or whatever. Let's just consider this. Just move your stop to break even, and then you got to kind of sort of do this, you know, okay. I've closed out 2 lots, I'm running 3, but I'm not going to lose money on the other 3. The other 3 you're kind of, okay. And then, right, it consolidates for 2 days. I mean, it's mentally you're getting used to holding on, right? And so it does this for a couple of days, and man, it bounces up a little bit, you're getting a little nervous, but you hang on, and then 2 days later, it dumps again. I just keep dumping lots into weakness. Like when it dumps here, I'll dump another lot here. So I've taken my 5 mini lot trade down to 3. There's 2 are gone here, 1's gone here. But whenever it moves down, I get rid of more lots. But you know what I do with my stop? I don't move it. I leave it here. Well, no, my money management is not moving my stop. My money management is closing lots into weakness. Does that make sense? I leave my, because, listen. No, break even and well, what if the trend is long term? Who's going to wind up being right? You know where my stop is here? Yeah, long term I'm going to be right. But down here you're plus 200 and your stop is still back here. But what's going to happen if you move your stop back here? What's going to happen? You're going to get stopped out, dude. 6 mini lots, it goes up to plus 100. You close out 3 minis and move the stop on the other 3 to minus 100. What's the worst case scenario? You have 200 pips of room to your stop. And you basically say to yourself, I'm willing to accept a break even on this trade. It's going to hurt. But are you going to get popped out on some little 40 pip spike? Nope. And I'm telling you, it's going to hurt. But the worst case, now, but let me give you a risk reward scenario now. What's the risk? What's the potential reward? Huge. Now remember, you're closing out half your lots, and you're just, it's like you look at it, but all these 30, 40 pips, these retracements, you don't even go, your stop's 200 pips away. What do you care? You're strictly looking at the trend. Trade setups are fantastic. I mean, I'm going to show you some snapshots of what to look for. And we're getting into technical analysis and relative lows. But there's a certain chart formation that you can look for in currency pairs that it happens in the stock market and everything else too. And it's called increasing tops and bottoms. You can see these. You can see this occur on the Forex all the time, and even with stocks. There's various other trading. And so the basic look is like this. It's increasing tops and bottoms, and it's bullish. Well, let me finish telling you. It's increasing tops and bottoms. Anything bigger than a 720-minute chart or a 4-hour chart. 1-hour chart on the free trend indicators is probably acceptable. 1-hour chart or larger on the free trend indicators, preferably a 720-minute chart or larger. in reality, it can be any time frame. You have increasing tops and bottoms. This does happen in the Forex. So a currency pair is behaving like this. And it's building increasing tops and bottoms. Okay? The bottoms are increasing in price, and the tops are also increasing in price. So it's kind of sort of oscillating, but it's building strength at each point, and eventually it's going to, these always break out to the upside. They build 2 increasing bottoms, possibly 3, and then kaboom, they're out of there. So what's the safest place to trade them? And this isn't the 10 pip club here. I mean, come on, we're looking at 60, 70 pips or more, something like that. You drill down the charts and you locate this chart formation. Now I'm going to tell you on the indicators what to look for here. This is a swing cycle setup. So let's say you're using the big time software, the red and green light software. This would be like your long-term chart. This would be the weekly chart on the free trend indicators. This is a trend that's been going up, 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 and it's a solid trend, long-term trend. Okay, but on your short-term daily trend, which would be maybe like a 4-hour chart on the free trend indicators, it comes down for like, I'm talking 3 to 4 days. You know, 4-hour indicator, where it comes down and it stalls, and then you're looking at that long-term chart and it's still pointing straight up. That's a OMG, oh my God moment. Because this is what's called a relative low. That number 2 there, there's a relative low. These are all relative lows. So it came down to this point, but the long-term trend is that way. You know that it's going to build another increasing top, so it's going to go to this price that it was at previously, and it's going to go higher than that. And you know eventually it's going to break out to the upside, so it may not, if it breaks out past this point on the next cycle, it's at least going to build an increasing top higher than that one, and it could just break out and keep going because of the long-term trend. So this is called a relative low. These are called relative highs. This is called a relative low right here. So the long-term trend is up, but it's sold off. And the technical term is a relative low. So any of you guys that do any form of technical, when you see one of these, you don't have enough money in your account to trade it. I don't really even think you need the heat map. But you've got to be able to recognize this situation. Now, I know that some of you already have seen this before. How many people have seen this situation before? Yeah, even on the stock market and stuff like that. Just anything. So really, out of 65 people, at least about 25 people raise their hand. This happens, and when you see it happen, go get a babysitter, go get rid of the kids, rent them out for a week or something, or 2 days. Because this is one where I will actually call in, order out for food. I'm going to get in front of the computer for 12 hours on this one. Because I know that this is the one that I can do a lot more lots on. With tools like the heat map and price alarms to monitor it, I would monitor this with a PDA. Walking around the grocery store, I'd trade off the money. This is just one of those ones where if you see this chart situation, you've absolutely got, listen, if you're trading microlots, you're good to go on more. If your normal trade amount, let's say everyone is comfortable, Joel might be comfortable trading 1 regular lot. You might be comfortable at the 5 mini lot level. You might be newer in trading 4 to 6 micro lots on a trade. Whatever amount you're trading, at least double it on this one. If you're a micro lot guy, it's time to go for the minis. It's time to change your account value. Okay? It's time to take a $5,000 account to $6,000 in one trade. And this is the situation I want you to look for. And if I see it, it will be in my reports. So the pair comes down, and the long-term trend's going that way. This is one of the best things. And I'm not talking about it came down on some small chart. It came down for 4 days. That is a big-time setup. It's just awesome. That's where the money is, and you can increase the lots. Now, it works the opposite way, too. You know, in a huge long-term downtrend, and then it cycles up against the trend. All week long, I kept saying, boy, British pound. I thought it was going to go back down. So now it's what's the British pound going to do? It's going to go to the next resistance level, and I'm looking to sell it right off of that. Now, you can also do this on the next smaller scale. The next smaller scale is, in this situation, it's the same thing. Okay? I'm going to have to redraw that. I'm not very good. I drew that myself. What do you think? I drew it. In this situation, the actual trend is not the long-term trend anymore. The actual major trend is, that's terrible, isn't it? They got any whiteout? Spray paint? This actual trend might be something like a midterm trend on your software or a daily chart on the free trend indicators, and then the minute lights just sell off. Big time. Like a day and a half sell-off. So it went up and it made its relative high, and it's down here now. This is the safest trade on the planet. This is beautiful. This is one where you stack lots. It's just... Now, in this situation, it comes down, and then you drill down the charts, and it stalls, and it builds number 2, which is one of your relative lows here. And it's getting ready to get back into the trend. So when it builds that relative low, and I'm going the other way, it's a relative high where it stalls and then comes back into the downtrend. This works going in 2 directions. I'm just showing you the long direction. And as soon as it starts to build strength to the upside, I don't need any heat map for this. You can't really, it's just too technically perfect. And if you do see one of these, remember, I'm putting this on the video. You will see this, and you will see this, and I'll alert you to it in my trading plans that, this pair is sold off against the trend. We think it's going to go back up. And then if you have tools like the heat map and price alarms to get you in, you're in tremendous shape. But if you get that 4-hour chart to sell down and it's going that way, which is the bigger trends we just looked at a minute ago, that will change your account value. And I can actually make a suggestion that you increase the number of lots beyond your comfort level.
Isn't this just a classic pullback?
This is a classic retracement. This is a classic relative low. It's classic technical analysis. It's just perfect technically. And the long-term trend, it's going to go back up. And then when it hits that relative low and starts to flip back up, all this stuff I talked to you earlier about, the changing drivers and everything, it just all comes together. You're just seeing it and you're just going, holy crap, this is perfect. And you got to, if you have a trading buddy, you better start deciding shifts. No, you're not going to, because you're not going to get, this is where you get in front of the computer and you stay there. You call out for food, you call a babysitter. You'll be able to pay the babysitter. This is serious, I think. And I wanted to get this into the training video. So think about what I'm talking about. And remember, it works the opposite way. Long-term downtrend, and that thing is cycling up for 4 or 5 days. You're setting alarms. You're just doing everything you can to try to not try to get in it early. I will wait for the alarm. I will wait for the heat map. But this is great trading, and you're trading more lots. Does everyone understand this from a technical standpoint, why it's so safe?
What is your alert price?
The alert price? Well, good question. But here's what I would do. I would wait for it to come down and then stall, and then look to see how the time frames look. Just wait for it to come down and stall. As soon as it starts stalling, then check your support and resistance and drill down the charts one more time and start watching the smaller time frames on the left, whether if it's my free indicators or the software, and you got to wait till they start hitting the bottom, and they put in a support number. And when you go see them, then when those small lights start oscillating and building, it's got to put in. Remember, you're trading in the direction of the trend, and you're getting a better price in that trend. Oh my God, it's hard sometimes to not get in. But when the smaller time frames start building, increasing tops, and building like that, you can start stacking in. 3 mini lots, 6, right? Pulls back a little, 9, 15, 40. What? Yeah, or scale in, where lots. You start small. The trend is in your favor. It's sold off. Low risk, high reward. Money management ratio, huge. 6-7 to 1 money management. Beautiful. It's time to pull the trigger on some lots. So what did we go through today? What was the first thing I said? I said seek the knowledge first, the pith come later. You know where all the information is now, and we're going to continue to build the libraries. Okay, so even those two at the end that I skipped, we can certainly go back, and you guys can look at those, and you can say, hey, I was in the Dallas seminar, I reviewed these two, I got a couple questions. Obviously, these are so huge here, multiple time frame, Forex heat map, parallel and inversion, support and resistance. Without these, you can't trade the Forex. I'm giving you an option for 3 sets of trend indicators. I went through the steps of writing a trading plan, and you can review these principles again. And then explain, Forex early warning, the trading plans. We're talking about, remember that when I send you a trading plan, here's something important to remember. If I send you a price alarm on it's like you were asking early. If I send you a price alarm on the Euro Swissy or something, and the Euro Canadian's going, it looks like it's the perfect one, just do what the heat map says. So I appreciate y'all coming, and we'll see you in 15, 20 minutes upstairs. Y'all take care.